Mark Twain once said, "Don't just sit there and worry. Be proactive. Do something, anything about what's worrying you, so you can gain information, focus, and control over the situation." I've suffered a great many catastrophes in my life. Most of them never happened. And it's with that thought in mind that I invite you to our Worry-Free Investing Seminar. Hi, my name's Jim Penna, and I'm the Manager of Retirement Services here at VectorVest, and I'd like to take just a few moments to talk about how the Worry-Free Investing Seminar can change your life as you approach or enter into your retirement years. We will be conducting the seminar live from our training center here in Cornelius, North Carolina on October 20th and 21st. And we'll be live streaming the event so that you can enjoy it from the comfort of your home or office. Not able to be in front of your computer any part of those 2 days? No worries. The live stream will be recorded for you to watch and review at your convenience for 60 days. The seminar will walk you through 3 steps to retire with peace of mind. They are the key pieces that every retiree should implement, and they make up what we call worry-free investing. By following these 3 steps, you can retire with peace of mind knowing that you can grow your portfolio, generate income, and protect your capital. When we asked our clients how they wanted their life to be different in retirement, most of the common things we heard were they just wanted to relax, they wanted a comfortable life. So what could be holding you back from doing that right now? In other words, what could be the problem? Well, first off, your portfolio may be going nowhere. You're doing a lot of work, but you're just spinning your wheels. And it seems like every time you make some gains, shortly after that, your portfolio rolls right back, sometimes in a deeper hole than where you started. Second, you don't know what to do when things go wrong or when the market goes against you. And finally, you feel as though you're spending so much time just trying to figure it all out. And in the end, you feel as though if you can't get things fixed, you're not going to have enough money for retirement. That income stream may just rust shut, and you may not be able to turn it back on. But it doesn't have to be that way. Instead of that happening, you want to be able to grow your portfolio safely and steadily. You want to know exactly what to do when the market turns against you. And you want something that doesn't have to take a whole lot of time to do, so that when you do retire, you can relax and enjoy that comfortable life. So here are the 3 key principles that you need to achieve those goals. First off, you want to play it safe. You need to focus on buying safe stocks of companies with consistent and predictable financial performance. Now, we did some research, and we found that the stocks with the highest relative safety rating in our database had a 98% success rate of going up over time. Every day, starting back in May of 1996, we took the top 20 relative safety stocks and tested their performance through the end of 2015. And here's what we found. Over that time period, there were 4,697 trading days. The top relative safety stocks went up in price 4,621 of those days. That's a winning run percentage of over 98%. Our founder, Dr. Bartolito, has always taught that good portfolio management starts with buying the right stocks. It's like filling your portfolio with all-stars, much like the arguably greatest sports team of all time, the New York Yankees of 1927. Just having those great stocks in your portfolio will help you do well over time. And here's how it works. When we signal a confirmed up in the VectorVest program, we go out and we buy high relative safety stocks. When we get a confirmed down, we simply don't buy stocks. And finally, we sell stocks when the recommendation equals sell in the VectorVest program. Now, relative safety, I mentioned earlier, is an indicator of risk. It's the consistency and predictability of a company's financial performance. Now, what 2 better adjectives can you think of to describe the stocks that fill your retirement portfolio? And here's a picture of why I fell in love with high relative safety stocks. You just can't escape the qualities these high RS stocks possess. The beautiful patterns of both price and earnings per share from that lower left to upper right smooth movement there. These are the type of characteristics we see over and over again in our high RS stocks. Again, as earnings per share rise, so too does the price of the stock. And again, these are all high RS stocks, and it is not by coincidence or accident that the price of these stocks have this steady upward movement as their earnings per share follow the same pattern. And when you continuously fill your portfolio with these things of beauty, these are the results. So by following this plan since 1996, our test showed an annualized rate of return of over 32%, and that $100,000 portfolio is now worth over $800,000 with over $700,000 return. So just by following the key principle number 1 of playing it safe with high relative safety stocks, your portfolio can see steady appreciation over time. In addition to appreciation, you also need to generate some income, which brings us to key principle number 2. You need to have a way to generate safe income, and capital appreciation is great, but you need that steady income every month to pay your bills or do other things that you want to do. So while we should focus on capital appreciation, if you also start to collect some nice safe dividends, you are now starting to generate that additional income. And here are those same stocks with the dividend payouts down below. This is a 5-year look back, and we can see these high RS stocks have a history of not only paying but growing their dividends year over year. Each of these pair of flags represents one dividend payout. It's an ex-dividend and the payout date. So over these 5 years, we've had 20 different occasions where we've collected dividends for these high RS stocks. So again, when we fill our portfolio with these types of companies, these are the results we can look for. This is the worry-free winners using high relative safety stocks over a 5-year period, just collecting the capital appreciation and dividends. It's up over 77%, and in this particular case does not even include the compounding of those dividend payouts. Now in a shorter term, by following this plan, since the confirmed up we received back on November 15th, we're up over 35%. This particular portfolio does include the dividend payouts as well as selling covered calls at strategic times throughout the life of the portfolio. Let's take the power of dividends a step further. In the seminar, we'll talk about how easy it is in the VectorVest system to choose a search that we call blue chip dividend payers. This 5-year study shows a return of just about 75% or 14% annualized. And that doesn't include, again, the dividend payouts. This equity curve is just the capital appreciation. Remember, this is your retirement nest egg, not your day trading account. 14% annually is a pretty impressive number. Now let's take a closer look at the power of the dividends. Here I've got a spreadsheet for that portfolio we just looked at over 5 years. We've only done 19 round-trip trades. Currently 10 positions are open. And I've highlighted here the dividends collected for each position. That's over $20,000 in dividend payouts over those 5 years. These are the round-trip trades. The net profit from those trades is over $23,000. And then, of course, we have the 10 positions that are still open, and we're continuing to collect dividends on each of those positions. So when you factor in the $20,000 dividend payouts, you're looking at over a 95% return over the last 5 years using these blue chip dividend payers. And finally, when you add selling options to the mix, you have really compounded the amount of income you're able to generate. But more importantly, you need to have insurance. You need to have insurance for your stocks and your portfolio so you can mitigate those drawdowns and ensure that you are protected. Which leads us to key principle number 3, and that is to protect your assets. You want a way to protect your portfolio at times when the market shows signs of trouble. We will show you how to do that to insure your portfolio. Here's an example. THO, or Thor Industries, is another historically high relative safety stock that would be purchased and shows up on most high RS searches when we signal a confirmed up call. In this case, we're going to use the confirmed up of 11/15 of 2016. THO, again, came up on 5 of our top high RS searches. And so if you had followed the system, you would have purchased that stock. We'll use 100 shares for our example at $85.67 on the next day's open. On 2/27/17, we plan around the upcoming earnings report. Because remember, we have a stock here that on that date had a current profit of $2,718 or 24%. And because we do our due diligence on all our stocks, we knew earnings were coming out just a couple of trading weeks later. And so as Mark Twain said, we will be proactive. We will not worry about what happens when those earnings are released. We're going to be proactive and protect our unrealized gain. And so on 2/27, we plan for those earnings that are soon to arrive on March the 7th, and the worry-free investing rules tell us that it's time to act. And in this case, we're going to buy a protective put. So here's the case study. On 2/27, again, with THO trading 112.85, we go ahead and buy one March 110 strike put option for insurance. That contract costs $2.85 per share or $285. Earnings are announced on March the 7th. Again, we did this about 2 weeks prior to earnings so we can prepare for that. And after earnings were reported, the stock falls. But because we bought that March 110 strike put option, we're covered. And let's see what just happened. This is a screenshot from our options analyzer tool, and it tells us that had we done nothing, that stock that we purchased at $85.67 and it traded as high as $115 had fallen back down to $98.24. Now that still left us with a nice profit of $1,257 on our 100 shares. But because we were proactive and we went out and bought that protective put for just $285 to protect roughly a $12,000 asset, we were able to return $891 on the value of the put. That brings our net profit at expiration of the put option at $2,148. And that's versus the $1,257 profit we would have had we done nothing. That is a 70% difference in your return on investment. Again, consider that over time on each position, whether it's the overall market or an individual stock, the ability to understand when and how to buy the protective put, to buy the insurance, is invaluable. And so it begs the question, how do I start building my worry-free retirement portfolio? Well, it's time to make a choice. You have two options. You can keep doing what you're already doing and continue to see the same results, or you can learn how to build and manage your portfolio to achieve greater growth, income, and protection in your retirement years. So again, join us for our Worry-Free Investing Seminar, October 20th and 21st. We're going to live stream from our training center here so that you can enjoy it from the comfort of your home or office, and it will be recorded. If you miss any portion of those 2 days, a link will come out with a full recording to watch and rewind at your convenience. Just go to www.vectorvest.com/RS to register for the seminar. On day one, we'll talk about the VectorVest system of analyzing and ranking stocks to fully understand the power of relative safety and our other indicators. We'll talk about market timing and knowing the safest time to buy. And from there, we'll step into actually building our portfolio. And it begins with finding the right stocks. It's safety and quality first. We'll continue the finding the right stocks concept by taking into account the dividend yield, safety, and growth of those quality stocks. We'll end day one by testing the worry-free system using our backtester so that you can build confidence in the trading plan, because that is the key, having the confidence to invest your hard-earned nest egg into the trading system. Day two, we'll talk about an introduction to the trades that you need to know. The goal here is not to turn you into an options trader, rather to get you to understand and implement two of the most very basic option trades there are, I believe are necessary to manage your retirement portfolio, and that is first, covered calls. Learn to get paid to be an owner and reduce risk on your stock positions. Learn how to eliminate risk and worry with just one trade, that's the protective put. And then finally, we'll combine the two to talk about the collar trade. We call it worry-free investing in action. And at the end of the day, we'll have a bonus session called the Income Portfolio. Sell your way to the ideal retirement. Just one trade a week can net you anywhere from 15 to 20% return in your retirement portfolio. And we'll show you how. So go to vectorvest.com/RS and you can save $100. It's our special early bird price. It expires, the early bird special expires on October the 13th. Now, as an added bonus, we are going to offer you 4 live group coaching sessions. Here we focus on tips and techniques, targeted help for your individual questions. All of these coaching sessions are going to be conducted during market hours. If you cannot attend, these coaching sessions are also recorded. So at vectorvest.com/RS, you can sign up there, and we're going to give you 4 full hours of targeted tips and techniques to help you build and manage your retirement portfolio. And of course, it comes with our 30-day money-back guarantee. And so we look forward to seeing you at our Worry-Free Investing Seminar that will be live streamed from our training center on October 20th and 21st. VectorVest.com/RS is the site to register, and I look forward to seeing you there.